Over the past few years, the significance of cryptocurrencies has grown far and wide. The digital asset market is constantly evolving, with investors discovering new use cases regularly. Currently, there are thousands of cryptocurrencies in the market, with Bitcoin as the largest and the greatest of them all. The market's growing popularity has led to an increase in cryptocurrency investments. However, investing in cryptocurrency might not be that easy. There are various facts about cryptocurrencies that beginners should understand and analyze before diving into the market, starting with its intense volatility that led to the fall of major cryptocurrencies like Bitcoin and Ethereum. Even though the crypto market's volatility is worrying investors, investing in cryptos is not likely to slow down anytime soon. In this video, we will explain the top 10 things you must know before investing in crypto in 2024. But before we get into the video, please like this video and subscribe to the channel. It costs nothing, but it will help the channel with YouTube algorithm. The first thing you need to know is that you don't have to put in more than you can afford to lose. Crypto is riskier than many other investments. Nothing is guaranteed other than volatility. What's more, it's unregulated in most cases. There is no FDIC insurance for this stuff, nor is there a buyer of last resort. The prices of crypto coins swing wildly from minute to minute. While the market is basking in the glow of bull run, it has endured painful and protracted corrections, and almost certainly will again. Danger varies in degree. Bitcoin, the original cryptocurrency, has been around for more than a decade, and it's significantly less likely to disappear than most other coins. But it's not free of risk either. Hence, don't bet the proverbial farm or your life savings on any coin. Now, the second thing you need to know before you invest in crypto is that you have to research thoroughly to invest. Before you invest a significant amount of money in any digital currency, spend hours upon hours researching the technology so you understand the value proposition and the risks, or someone else will buy it from you for a higher price. If it's not a value proposition, go to online Q&As. Ask lots of questions. If you don't understand what you're hearing, don't be afraid to ask someone to explain. If it is still not making sense, don't assume that's on you. People could just be talking nonsense. The sincere ones will take the time to help. But even then, be wary of people telling you to buy what they own, so the price goes up. And even if you're convinced, seek out skeptics, there is no shortage of them, and consider their arguments as well. Once you think you've researched everything there is to know, do even more work. You're probably not done yet. Now, this ties with the third thing you need to know before investing in crypto is to resist fear of missing out, or the industrial term FOMO. If the only reason you're investing in something is to avoid missing out, the only thing you won't miss out on is losing everything. Fear of missing out is a sure way to destroy whatever wealth you may have accumulated over the years. The problem is that it's a gut reaction to something that should be researched first. Trading based on your gut will quickly lead to an upset stomach. Know what you're buying. Really know it. Going on a trading app and seeing the crypto is up 30% or so over the past 24 hours isn't research. It could be you're the unlucky sap being sold a falling crypto. Every coin has pumpers, even Bitcoin. Don't succumb to peer pressure. This isn't high school. Think for yourself and evaluate the case for an investment on merits. Research, then research again. This relates to the fourth thing, which is, if it sounds too good to be true, it probably is a scam. Much like Wall Street, the US Congress, or the American Bar Association, crypto is rife with charlatans. There are more than enough people promising their project will be the one to overtake Bitcoin. But is it? There's only one way to find out, is research. Buyer beware, but borrower also beware. Some crypto exchanges offer more than 100 times leverage, meaning you can borrow up to 99% of the cost of an investment. This will juice your profits if a coin goes up in value, but if it goes the other way, you could quickly be wiped out. The fifth thing to know before investing is that do not trust, verify. Scammers abound in this market. Just this past weekend, some rascals on Twitter took advantage of Elon Musk's appearance on television show Saturday Night Live to defraud people out of $100,000 worth of various cryptos with a bogus giveaway. Impersonating the comedy show's Twitter account, the miscreants instructed their victims to send small amounts of crypto to verify their addresses. They did it so they would get 10 times the amount back. That too good to be true proposition was a red flag. Do not trust them. So the sixth thing related to this is to beware of unit bias. Just because a coin is trading around $1 does not mean it's cheaper than Bitcoin at $40,000. Not all coins are created equal. There are literally thousands of cryptos, some of which seek to emulate Bitcoin and some of which try to solve other issues. They all have varying levels of developer support and decentralization. Determining the value of a coin means asking how and why the coin was created. What is its supposed utility? Who is working on it? How big is the developer community? How active the devs are? Crucially, what is the coin's security model? Proof of work, proof of stake, or something else? If it's the former, how does the hash rate compare to other POW coins? If you don't know what these terms mean, you're not ready to invest. Learn first. The seventh thing you need to know before investing in crypto is to understand that if it's not your keys, it's not your coins. Crypto is a bearer asset like cash or jewelry, meaning the holder is presumed to be the rightful owner. Once it's lost or stolen, it's gone. That is why advanced users will advise you not to entrust the cryptographic keys to a digital currency wallet to a third party, such as an exchange, because these exchanges are largely unregulated in many places and may be subject to hacks or exit scams. DeFi platforms have fallen prey to numerous high-profile exploits, and centralized platforms like Binance have been subject to their fair share as well. However, safeguarding keys yourself on a hardware device or even a piece of paper with the string of numbers and letters written on it can be a nerve-wracking business, and it's easy to mess up. This is why even some experienced investors prefer to use third-party custodians. Crypto is all about trade-offs. Do you trust yourself not to lose that piece of paper or forget the seed phrase? If not, you have to be comfortable with someone else storing your digital valuables, and history gives you every reason not to. Aside from exploits, exchanges may block you from withdrawing your funds at any time for a variety of reasons, ranging from solvency issues to legal trouble. Even beyond that, some exchanges just don't have the infrastructure necessary to remain up at all times. Coinbase and Robinhood, for example, often go down during periods of market volatility. If you aren't running your own wallet, you can't guarantee you have control over your coins. That said, there are various reasons why you might want to use an exchange, so it's important to check the user agreements and make sure you're protected against different eventualities. So the eighth thing you need to know before investing in cryptocurrency is that you can buy a fraction of a Bitcoin and most of the other cryptos as well. You don't need to buy a whole coin. Bitcoin, for example, is divisible to the 8th decimal. So if you're curious about how this stuff works, you can purchase as little as $10 worth of BTC and just play around with it. As billionaire Mark Cuban recently said on television, of buying small amounts of Dogecoin, it's a whole lot better than a lottery ticket. Unfortunately, he also encouraged viewers to spend Doge on merchandise without mentioning the tax implications. This ties with the ninth thing you need to know before investing in crypto, is that you have to understand the tax consequences. This is especially important in the US for several reasons. First, the Internal Revenue Service, IRS, considers crypto property, not currency, for tax purposes. The upshot is, if you buy a coin for $1 and it doubles in value, and you spend that extra dollar to buy so much as a pack of chewing gum, you are required to report that capital gain and pay tax on it. There is no de minimis exemption, despite the crypto industry's lobbying efforts. Also, centralized exchanges regularly send account information to the IRS. Sure, crypto isn't as regulated as stocks or banks. However, the federal government is running a massive deficit, and it won't think twice about sending in folks with mirrored aviator glasses visits you to ask about your crypto trades. The 10th thing you need to know before investing in crypto is buy using dollar cost averaging and don't obsess about price. Go outside, get some fresh air, exercise, and sunshine. Spend time with your family. You can do all that and invest in crypto. The markets will fluctuate from day to day, hour to hour, minute to minute, but any crypto worth a damn, any investment of any kind worth a damn, is a long-term bet. If you want a dopamine hit, go for a run or watch action movies. What's the best way to invest and not obsess? It's using dollar cost averaging, known as DCA. Buy a set dollar amount of whatever crypto you like at regular intervals. Daily, weekly, monthly, annually, you pick. And don't look at it. If you have a long-term view, you're not going to be pressured to sell or up your position based on short-term movements if you use DCA. This put an end to our today's video. I hope you understand the best tips to invest in crypto that are possibly available on the internet. Smash that like button and subscribe to the channel for more crypto investment tips and more content on crypto. See you in the next video.